Welcome to our CoinMarketCap third live webinar. Our webinar series is an ongoing effort to bring different educational materials from key players in the industry. Don't forget to subscribe on this YouTube channel to get updated on our future webinars. My name is Carolyn, and I head up strategy and marketing at CoinMarketCap, and today I will be your host. So if you're just joining, let's give another minute for people coming in to our webinar channel. Today we will be looking at how to characterize cryptocurrencies, and joining us today is none other than Dave Balter and Eric Stone from Flipside Crypto. Dave is the CEO and Eric is the head of data science at Flipside. And they're gonna tell us more about what they're doing with the Fundamental Crypto Asset Score, or FCAS. So FCAS was actually introduced on CoinMarketCap a couple months ago. So they're currently on the ratings tab on our cryptocurrencies details page. So a lot of our users have told us that they found it really useful. Kind of beyond just looking at price and volume, they want to look at some fundamental analysis and more data in that sense. So I think FCAS is really special because it's not just looking at qualitative analysis of blockchains and the projects, but also the quantitative aspects. So today we want Dave and Eric to deep dive into what makes FCAS special and how this helps our users and the projects themselves to evaluate blockchains at a more fundamental level. So Flipside will first present the details of FCAS for 20 minutes, and then we will have a discussion based on those questions that our community have submitted so far. So Dave and Eric, take it away.
Okay, thanks, Carolyn. Hi, everybody. I'm Dave. This is Eric. Thanks for joining us. We're excited to be part of this. We're going to do a quick 20-minute presentation, and then we'll do some questions and answers, and hopefully this is informative for everyone. So I'm going to share my screen. Hold on. There we go. Here it comes. You should be able to see the blue screen, the mountains. Is that correct, Carolyn?
Yep, that's correct. Looks great.
Okay, so here we go. So as a kickoff, I just wanted to bring everybody back to January this year for Apple's Q4 2018 earnings. In their earnings call, they described what was happening with Apple in the last quarter. They talked about 1.4 billion installed devices, and iPhone sales had actually been down 15%, yet other products were up 19%. And the executives at Apple spoke in a pretty clear view that we would expect on an earnings call. They talked about customers and products, growth, earnings, all the things we'd expect because they become and they are the foundations of any business that is beginning to grow. The difference, though, is in the cryptocurrency project world, the same standards have not applied. As this industry has formed, people use terms to describe their organizations like decentralized and protocol and maybe their foundations. And we don't want to say this isn't important what we're all doing. We believe blockchain tech is revolutionary. And yes, we removed the untrusted third party, and we've broken all these wonderful geographic boundaries. But we'd like to start with sort of a big reality check, which is nothing really succeeds without customers and revenue. And I think to this world we're in, and what we're about to show you is crypto projects and organizations need to think of themselves this way if they're going to survive. And certainly if this industry is going to truly transform the world in the way that we all believe is possible. So the footnote here is we like to think of crypto organizations, whether they're foundations or protocols or decentralized, they're businesses, and our job is to help people shed light on exactly what it means to be an operating organization in this space. Okay, so keep that in mind as we sort of roll through the things we're going to discuss here. By way of background on who we are, Eric in the middle here is these are the three co-founders. Eric's the data scientist. He brings all the algorithms to light. The three of us, the gentleman on the right is Jim Myers, our CEO, and I'm on the left here. The three of us last co-founded a company in 2010 that ended up selling in 2014. It was also based on data. It was a machine learning skill assessments business. Flipside Crypto itself is backed by venture capitalists, True Ventures. Coinbase Ventures, Digital Currency Group, and others. So we've been working on this problem for the last 2.5 years or so, the problem of how do we help understand and characterize crypto organizations. What we do as a business, besides providing FCAS, which we're going to talk about, is we focus on providing business intelligence to crypto businesses. So we do not sell services to investors. We actually have some free tools for investors, which we're going to show you how to access. But where our clients lie is actually in the projects, in the platforms themselves, who we help grow as organizations. Right? So we've all sort of, we've spent many years loving CoinMarketCap, and that's been a way that we've sort of valued cryptocurrencies historically. We spent our time focusing on a different way to evaluate cryptocurrencies. It goes hand in hand actually with market cap and price, but it actually gets to the heart of the fundamentals, the health of these organizations. And we'll talk about there's sort of 3 core components to what we measure. The first is financial stability. We have metrics that measure forms of liquidity and risk based on price data, exchange data, et cetera. But the 2 key fundamentals that we focus on are product development and user behavior. We're going to dive deep on these, but product development, we're measuring open source code repositories. We track about 30 different data points, and we look at the interactivity between those. We'll talk about those. And then user behavior, which is really the key to our metric, is focused on ingesting open sort of blockchain transactions, smart contract movements. We label addresses based on behavior types, so speculators or users as an example, and we use that to understand customer journeys within a specific crypto ecosystem. Okay, these 3 components, these things together, we build factor models between, do a whole bunch of fun data science stuff, and we use that to create a single, consistently comparable index value we call FCAS, Fundamental Crypto Asset Score. FCAS is applied to about 520, 530 crypto assets today, and you can find those on CoinMarketCap. Exactly, this is CoinMarketCap and its ratings tab. We'll show you a live one in a second, but actually has historicals for our FCAS rating system as well as some other data. FCAS is displayed on a variety of other sites. You can go find it in other places. I believe, if I remember correctly, CoinMarketCap is the only place that provides the long-term historical trend. So that's a good place to go look closely at FCAS. So let's talk about these 3 areas. We're actually going to focus on 2 big ones. Financial stability is a small part of FCAS, less than 5%. So let's focus on the 2 big ones. So developer behavior is intended to identify whether you can deliver product. It is, as I said, based on open source repos, 30 different data points. And the key question we often get is, well, what can I do to influence my developer rating? And should I commit more? Should I have more bug fixes? And what we'd say is there are 30 things we track. We'll show you. And it isn't about any one of them. It's actually about how they interact with each other. So if you have a lot of commits and no bug fixes going on, that's probably not a good sign. We'd like to see even behaviors across all of these different formats. The other core metric is user activity. Here's a screenshot of Salesforce. If you're going to evaluate a specific public equity like Apple or maybe Salesforce, the thing you'd begin with is how many customers do they have? Are they growing those customers? Are they retaining them? And so this metric for us is intended to state that over time, crypto organizations will have customers. Many do today, and many are adding them as they move to mainnet, et cetera. But how do we understand the behaviors of those customers, which is what we want to get to? So how do we get to that? So this is a little bit heady, but this is our ingestion process. We extract data from the actual blockchain. We cluster all of the data into what we call UDM, Universal Data Modeling. So we take all this data and we understand every behavior that's happening. We turn those into entities, and then importantly, we have a user classification model. This is where the core IP that Eric has developed and our data science team has developed that labels addresses. Okay? And that means by labeling, we're able to do a very specific thing. We're able to distinguish between who's speculating and who's an actual user. Okay? An actual user who is using that platform, that token, for its stated intended purpose. If you're a storage coin, for storage. If you're a stable coin, for actual usage as a transaction in a payment environment. Okay, so this is the key to what we'll measure. For those who are concerned that we may not maybe have their chain parsed, and how do you get to my users? We have a free tool. It's called Chainwalkers. It basically enables parsing of any chain. We've parsed about 25 chains today. It's super easy to do. If you'd like your chain to be parsed, we have documentation. You can go see that at the URL you see on the screen here. And here are some of the partners that we've already parsed today, so you get a feel for them. Okay. So from here, we're actually going to show you some live stuff that will make some of the questions relevant. We have two tool sets we'd like to show you if you're a project, platform, or dApp. We're going to show you some analytics. Much of it is free. You can use this URL if you're a project to sign up, fscrypto.co/free project analytics. And we actually have free tools for investors as well. FCAS Tracker is entirely free, fscrypto.co/tracker. So let's go to the screen here, and we're going to show you some of these live. There's Carolyn again. Okay. All right. So the first thing we're going to show you is things you are probably, you've seen many times. This is CoinMarketCap's page. And if you go down to the ratings tab right here, you will see actually the ratings that we provide right there. So we're going to show you Ontology, who's one of our partners. They're rated an A. Very healthy asset. You can see some of their trend over time here, so they're continuing to do quite well. What I wanted to start with is if you have free analytics from us, you will be able to receive insights into your own rating and sub-ratings by accessing our dashboard. So this is all free. This is a good look at Ontology. We really like them. More than anything, we love seeing this trend in user activity. It's going up over time. You can see their developer behavior is also going up. And just so you can see, we're able to dive deep into all these trends to understand which areas of developer community are moving and which areas of user activity. I do want to call out one thing here. Network activity is a look at all sort of economic throughput. So miners, speculators, investors, etc., and users. And this is actually users. So these are people who are using Ontology. Really high rating, a fantastic operation going on here where people are actually using this project. So pretty exciting. Okay? If you're an investor, really quickly, you can get access to it by signing up to FCAS Tracker. This gives you access to all of our ratings with changes over time. So you can actually see all the changes over time. We rate all 520 assets are in here. You can even do some fun historical evaluation and understanding specific area and components. So please check that out. Two last things I'll show you. One is if you're a platform, we will do analysis of cross-platform behavior. So this is Ethereum. You can see, for example, we look at categories of dApps. Here's identity, which has been growing as of late over the last few months. So that's a good thing if you want to know which categories are moving up or down. And importantly, in these platforms, we're actually able to see which categories of dApps are growing. So here's stable coins as an example, what's been happening with that. And then you're able to dive into specific projects. Here's TrueUSD, what's been happening with them, who's been working on it. And then we can ultimately get into the developers themselves who are building the dApps. It's my favorite view when there's a swirling icon.
Yes, a spinny loaders.
Oh, that's awesome. live.
Mm-hmm.
Should I wait? What do you think? No?
A lot of
Oh, go ahead. Yeah. Oh, okay. Let's, I'm going to try something here. An overview. And then we're going to go down. Here's a developer. So we'll just show you this view. So this developer has been working on Molecule, which is an advertising dApp. And you can see you can actually go right to their GitHub profile, etc. If you are also a platform, and we're going to show you, this is a view that dApps receive. This is free on Algorand. If you're building on Algorand, you can receive this. This gives you information about how your app is doing. You can label your addresses to build subcomponents. So I've got, this is one, but I could go in and take one of my addresses, label it, and then begin to track what's happening there. Okay. And then the last thing I'll show you, I'll actually jump out. It's probably easier to see it this way. Where we thrive as a business is providing deep user metrics. Once we segment a chain, we're able to go in and identify user behaviors specific to that chain. So transaction metrics, active users. This is again exploring without looking at speculators. So this is just users. You could also invert that and just look at speculators. But here's a good one. If you want to understand, are you retaining customers over time? This is an acquisition cohort. So if you look at right here, August of 2018, whatever you were doing then, 6 months later, you only had about 20% of users stick. And if you get out to August, sorry, this is June. If you get out to August, you're now over 50% are retaining. So whatever product you launched in August probably did better than whatever you were doing before that. So important types of behaviors we can track, and we can get into developer metrics and a whole bunch of other fun things like that. Let's just show you this one, and then we'll hop out. That one's going slow. Let's go. I don't know why that's going slow. Let's see if I can do it here. Yeah, so here you go. This will show you active devs. A lot of people ask us about developers who are not part of the organization. So how many open source developers do I have? What behaviors are they taking? Things like that. And we can give you all sorts of types of breakdowns around components like that. So I think that's what we have for live demo. Why don't I stop sharing my screen and we can move to the Q&A portion if that works for you, Carolyn?
Yeah, that's perfect. I think that was extremely informative. I think we've always wanted to see what the back end of Flipside looks like, what exactly is on the dashboard, how that happens. So I think there were some questions earlier in the community chat, and people were asking what were the free tools. So maybe you want to just repeat that again so people can take a look at it.
Yeah, I will do that. I'm actually going to share and show the URLs again, if that's okay. Yeah. Because people will probably want to get access to those. So these are the two URLs people should pay attention to. If you're a project, a platform, a dApp, you should sign up for pre-project analytics. So that gives you access to your information about your project. And if you're an investor, you should sign up for FCAS Tracker, which gives you access to all of the FCAS ratings and subcomponents and lets you build portfolios and track historical trends. Okay.
Awesome. Great. Okay. So I hope you guys caught that. So if you don't, we will send up another follow-up email if you already signed up on our forum, so you can get access to that as well later on. So I think we want to move into some other questions that we spotted in the community. So Dave, Eric, tell us, if FCAS data tracks closely to market cap and price, like are there any discrepancies? What are the trends there? Because obviously for us, like for CoinMarketCap with market cap in the name, we're all really curious about that.
Yeah,
please.
I can field that one. Okay. This is Eric, data scientist. I would say in general, the FCAS system is designed not to track market cap. So there are times when you'll see some correlation, particularly if there's there's sort of a hype cycle and a lot of new people are, say, investing in Bitcoin. Maybe they dig a little deeper and maybe try out some additional projects. You might see some correlation then. But in general, FCAS is intended not to focus on market cap. It's intended to focus on those two key fundamental areas Dave called out, which is developer activity and project utilization and network activity on those projects. So, there are a couple of ways we actually track whether those things are tracking with or against market cap. One of them is called FCAS 25, which you can see on our website. That tells this really interesting story, which is that the most prominent projects have seen sort of continued increases over the last several years in terms of the development activity and the utilization of those projects, even as the market has gone through pretty dramatic fluctuations. So it tells a different, there are different stories to tell about crypto depending on which of these metrics you're looking at.
So in terms of different, sorry.
I was just going to add, on CoinMarketCap, we actually publish once a week. It's the only place we publish this, a most undervalued and overvalued ratio for crypto projects. We publish the top 5 of each based on market cap. So if you're looking to understand like the distinction between FCAS and market cap, really the broadest distinctions, the ones that are furthest apart, that's a great tool. I think that comes out on Thursdays in the CoinMarketCap newsletter. So sign up now.
Yeah, so that's coinmarketcap.com/newsletter. So I actually read that every Thursday. I always found that really interesting. So in terms of like we have stories and different projects, like what trends do you see in developer and user activity data across the different blockchain platforms that we were tracking? Right now we are at 500 something on FCAS, correct?
Correct. Right. So in terms of sort of broadly speaking, I think we can, you could use some of the answer to the last question. I guess there's, generally speaking, a sort of rising tide of people using projects and development teams that are active on them. I think more specifically, one of the things we maintain internally is a pretty in-depth taxonomy that we've applied to around 1,300 projects at this point. I think it's about 60 use cases that we maintain. So we can actually look, over say the last year at how user activity in aggregate has changed at the use case level. One of the biggest upswings we've seen in the last year is in stable coins. That's not a huge shock, but you do see that reflected in the data, both in terms of development teams that are working on those projects and people using them. So that's cool to see. One nice thing I like to see is actually that projects with a social good bent have seen upticks in user activity and in developer involvement over the last year as well. So you can sort of get a few nuggets like that by looking at the category level.
Yeah, I think that's actually really cool. So one of the questions that people have asked us is, blockchains are open source, so can't anyone just gather user activity data? Why use FCAS?
Yeah, well, I'd start with there's some technical side to it, which Eric and our CTO could probably cover. But you could certainly go look at a Etherscan or some place to get basic transaction data. But inside of that, it would be impossible, frankly, to distinguish between what the addresses are doing related to speculating versus users. So the ultimate truth we're after is, which of these organizations are adding customers, who's retaining these customers, and what are they doing? And so you could look at any open source blockchain and see addresses moving around, but you wouldn't know what they're doing. Are they interacting with exchanges? Are they interacting between two customers who are exchanging value between each other? And so what we're able to do is actually go in, take a storage A as an example. We could say like, these address movements are clearly speculators, and they're touching exchanges and satellites, and they're behaving like speculators, which is healthy behavior. That's fine, that's okay. But we're gonna put those over here. These are actually customers, and what are they doing? Okay, wow, that's interesting. A whole set of customers are transacting every day. And there's a whole set that started to transact and stopped. So what's happening there? Let's understand what's behaving. So just because blockchains are open doesn't mean you can get to sort of the truth underneath all of it, and that's what we seek to do.
And with all these clusters and these patterns, like what role do you think FCAS should be playing in investment decisions?
Yeah, it's a good question. So I'll say that we started actually as an investment vehicle. What kicked off this business was Jim and I wanted to trade crypto. And we remembered a friend Eric here built some swing trading algorithms for hedge funds. And, hey, Eric, would you mind building us a model to trade? And so that really meant like 6 weeks of work, and we wanted it for free. It was okay. But anyway, so he did that for us, and we used it to trade. We actually were trading off of it. What Jim and I were realizing during this time was that we really wanted to understand users. We were sort of fundamental investors, so we'd always invested based on like customers and that sort of Apple example. And so we started tracking that and investing using that. Okay, so that worked pretty well. But what we about a year and a half ago, maybe 2 years ago now, we really looked at it and said, this data is incredibly powerful. Like, if we're gonna play a role in this industry, do we want to be investors, or do we want to actually help grow the industry? And can we use this data to provide business intelligence to the projects themselves? And so as a business, we switched to that. And then we started giving away our free, what we were using, free to investors. We sort of made a big decision, one of those forks in a business, and we said, you know what? Let's give this to investors. Let's let them have it. They'll look at it in all sorts of different ways. I can tell you it can be quite useful for investing, but it's not what we do every day. We focus on helping the projects understand what they're doing.
Yeah, I would add, I think both for what makes it valuable for investors and for crypto projects trying to understand where they sit in the industry and how to get more customers and where they stand and where they're moving. The key thing we're doing with these data sets, which you're correct, the vast majority of them that we're using are like the raw data is open and available, which is a great thing about this industry and this space. The key thing we're doing is applying universl ingestion models to all of these different sources, right? So whether it's coming from GitLab or Bitbucket or GitHub, whether it's coming from a third-party provider of blockchain data, or we're parsing it directly, or wherever we're getting the data, we're feeding it through models that standardize everything and give you a clear look that lets you know through a standardized lens where you stand, whether you're trying to answer questions about your customer or trying to compare, say, Bitcoin to, Dave keeps mentioning Storj. So our tools are intended to let people answer those questions sort of regardless of their perspective. But again, the sort of main goal, or the main thrust of our business is to help crypto projects and blockchain projects succeed as businesses. And the investor toolkit is just, right, it's more something we provide as a free tool because we have it, so.
Yeah, and with the Apple example and just helping blockchain projects to succeed, do you see value investing principles from the traditional equities world overlap a lot with the crypto world? What are some of the parameters that still hold, or what are some new parameters that should be considered more deeply in our world?
Yeah, I mean, you've been in this space a long time, so you've probably seen some of these shifts. I think if you went back 2 years ago, there was sort of momentum trading occurring, like, oh, what sentiment is, oh, there's a huge, pump, there's a Discord channel is doing X, and people would invest off of it. And yes, during that era, because of the way the market worked, you could make money doing things like that. What we love about this space is it is maturing incredibly quickly, and you're distinguishing the real businesses from maybe the ones that figured out how to build a community but didn't really figure out how to build an organization that could provide value to customers. And so what you're seeing now is it's evolved over the past year, where there was sort of a drop off in 2018 and sort of a return to sort of a strong path as we've headed into 2019. Is value investing, let's call it that, or fundamentals investing, has taken shape. And that to us is a sign of a maturing market. And investors, the investors now have these sort of two healthy tools to look at. They can look at market cap and price. A lot of the sort of, falsified, behaviors that would pump up market cap have moved away. I know CoinMarketCap has done a lot to enforce transparency and to create, like, you can use that really well. And now you can look at the fundamentals really well And so you've got these two really healthy tools that would allow you to be a value investor or a fundamental investor occurring. It's pretty fun time.
Absolutely. I think there has been that shift. I think even just kind of qualitatively, without looking at the FCAS data, we do see there is a shift there. So I think it's actually really healthy, really great for the space that's happening. I think we also had some deep dive questions more into the FCAS itself from the community as we were speaking. So for example, someone asked, does the financial health of a company count in the evaluation of a project's FCAS score?
Token economics, yeah.
Yes. So right. So I think Dave mentioned the financial stability of projects is evaluated as part of FCAS. It's by far the smallest of those, big three buckets that we evaluate, which are again so there's financial stability, developer involvement, and the utilization of the projects along with the network activity of those projects. So we do evaluate, the things we evaluate are volatility, we do some price projections, we look at the availability of the token or coin consistently. So we're looking at liquidity across the different markets it's offered on. We're looking at the consistency there. We're looking at the tendency for those prices to have shocks, to maybe have gone through a pump and dump cycle. And all of those things do impact our financial stability score. So that's there, and it's calculated, but again, it has a smaller impact on the overall FCAS.
Yeah, we do see one thing we're cognizant of is we've moved into an era where a number of organizations still utilize their token as a form of cash, meaning a form of capital to run their business. And so that does matter. If the price is moving in an effective direction or non-effective direction, they will change how they operate as a business. And so it's important. I mean, I think if I look 10 years out, that will probably always be the case on some level. And so you have to understand its financial capability in order to understand whether it's overall a healthy organization.
And in terms of the three buckets, we have financial stability as one of the buckets. And you say that's the probably weighted least out of all three. Can you kind of tell us a little bit more about the weightings that FCAS uses? Which metric holds the most weight?
Yeah.
Right. Well, right. We don't want to divulge too much of the secret sauce components, but I would say, Dave threw out 5% as a number for the financial stability, and it varies by the type of project we're talking about. Like, again, I mentioned that it's difficult to compare something like Bitcoin to something like a DApp on Ethereum. So depending on that, we do have slight variances in the weightings. Those variances are quantitatively driven, so we're trying to capture as much variance across the different metrics we track as possible. But the vast majority of the score, and for all intents and purposes, we could say it's a roughly equal split of developer and network scores. That's right.
Okay. So that was an unsuccessful attempt to get your secret sauce, but
There's a good question in there though, which is we do get asked a lot about the breakdowns, and to be honest, like if you knew that user activity and developer behavior made up the majority, like there's not much you can just be healthier, like quote unquote. I would say the thing we get asked a lot is why sentiment is not part of this. And we spend a lot of time analyzing sentiment, and the truth is that sentiment is what we aim for is to remove any metric that is possible to game. And so sentiment has a strong. It's very hard to know when someone has gamed sentiment. Meaning, did they just pour community people into their community, or did they frame conversations in a certain way? And it's very hard to analyze that directly. However, if your community is behaving effectively, you will see results in your user behaviors and your developer activity. And so we get asked the question, like, why don't we include sentiment? Because sentiment is a feeder to the ultimate health of a business. And so let's stay away from it because it's gameable, but if it's working well, you're going to see it in the other metrics.
Yeah, And I think it is also a lagging indicator. People do ask us as well, like maybe you can track sentiment data on CoinMarketCap. And I think part of it, we also have pretty much the same reason, that it is a lagging indicator. So maybe not that useful, but maybe in retrospect, it could be useful for some types of analysis. So other than sentiment, like what other metrics did you guys reject when you were building out the model for FCAS?
Do we reject? Well, I'll tell you that we are. I'm gonna maybe answer the question slightly differently. There are things we can see in user behaviors that are obvious, intentional gaming that's occurring. So, we get asked a lot, like, well, I could just do X, Y, and Z, and suddenly my user metric would be better. Or in the developer one, maybe easier. I'll just pump a bunch of commits in there. Okay, well, not only does it, again, we have 30 different data points and it's the interactivity between them, but the system will notice when someone has done something out of line, like dump a bunch of commits in. It recognizes that as ineffective behavior. So what we do is we'll throw out things that just are out of line. By tracking all these projects, it's actually really apparent when something just doesn't seem right, and the system identifies that. So
I would add too, in terms of particular, like how we decide what's going to go into FCAS and what isn't, which is a slightly different question than metrics we would monitor for, say, a potential client who sees something as useful for their business, something like network hash rate or something that is useful for them to track internally, but we wouldn't necessarily put into FCAS. I think the general rule we try to follow is that if we have to make a judgment call about whether a characteristic of how a project has decided to build itself is better than some other approach that some other project took, like then we're putting ourselves too much into the mix, and so we don't include metrics where that is required of us, right? So it's intended to strip all that away and to reflect the downstream indication of whether whatever your hash rate is. Do potential users care about that, and is it reflected in which project they're gravitating toward, right? So that's the idea there.
Yeah. So we'll get asked all the time, can you look at our white paper? Can you look at our team? We don't look at that. We get asked
code quality.
Code quality, right.
Hash rate itself.
Yeah. So where we get dinged from projects is like, but we're more decentralized. Okay. Now I love these. I think it's the coolest thing about what's happening here. But if you can be as decentralized as you want, but in the end, you're going to need customers somewhere. And so the end result is if you're more decentralized in a way that's healthy, good. We're going to see in user activity. We love that you're decentralized, but we can't rate your decentralization. It doesn't really matter to the fundamental health.
Yep. Makes sense. So I know when we first introduced FCAS to CoinMarketCap, there was a huge I wouldn't say backlash, but a huge hoo-ha from some of the projects that were rated an F. So tell me more about what happened then, what you were thinking about, and whether that has changed any of the ways that you've been analyzing or tracking the metrics for each project.
Yeah. So a couple things there. One, F stands for fragile, not failing, because the truth is many organizations are growing up in this era, and it's okay to be fragile. And so many of the projects we called said like, hey, you know what? We kind of know we're an F. Can you help us? Like, can we learn? That's the intent of more than anything. How do we help, right? Okay, so the things we do like to do is when somebody is in that range, the first thing to do is to help them understand why. Right, and so we will get some misperceptions. Someone will call and say, we've got the best developer community of anybody out there. Okay, all right, that's cool. We understand. Why don't we look at the quantitative metrics? Because maybe there's some things you are doing that are awesome, but maybe your best is relative. So let's talk about that. And we help them understand that. We help them understand their users and what can grow. We do recognize we're a ratings agency, and so not everyone is always happy with their rating, but we are quantitative. We don't intend to, cause any harm. Our intent is to help people see the insights that would maybe help both the market understand and the user understand where they are, or the project itself understand. So, we certainly don't like to upset people, but
I will say also the thing we'll do, we're human and we're rating hundreds of projects, and so if a project reaches out to us believing that we're missing something, or we're not tracking the right repository, we will definitely do a data review for them and do an audit. And we've there are a couple projects where we've had to make a correction, and we do that. I think our philosophy on what we report is that we want to portray the most accurate, most full picture that we can. So when we get new data, the score will reflect that new data.
Yeah.
And how often does FCAS reevaluate a project?
Every day.
So we publish new scores every day. Part of that publishing process is to calculate the entire last year of history. So we do that on a daily basis. There are a bunch of different checks we're doing to make sure that things aren't changing in a way that doesn't make any sense. I would say that the system is intended to reevaluate itself. So everything is on a moving window. Nothing in FCAS reflects the entire cumulative history of a particular project. I think you do see some, particularly on the developer side, you'll see some other representations of that kind of data that have scored, say, the entire development history of Bitcoin against the entire development history of a stablecoin that launched last year, and that will make Bitcoin look dramatically more powerful and healthier than that stablecoin. When if you're looking at the last 90 days instead, and looking at that moving window of 90 days, maybe they're about on equal footing. So we try to have our metrics reflect the recent/current state of the health of the projects that we're evaluating on the metrics we follow.
And do you think that some of the big changes in, for example, there is a huge wave of projects moving from proof of work to proof of stake, for example, or delegated proof of stake. How do you see FCAS evolving with some of the bigger trends in the space? Like where are the trends that you guys are preparing for, and how would the methodology move accordingly?
That's interesting. Right. So changes in the consensus mechanism are potentially interesting, though. Again, the idea of the metrics we've selected should follow that if that's resonating for users, and that's bringing people who want delegation stakes and are tired of spending thousands of dollars on GPUs mining, that'll be reflected in their network activity score. So that should work. I think one of the trends we're seeing that's a bit more of a challenge from the data side is, as particularly projects that developed successful ERC20 tokens on Ethereum that ran into the scalability issues that network presents, have launched mainnets, and that has accelerated of late. And it's a lot of work to go parse a new chain. And so, we're sort of constantly busy keeping up with all of that and making sure that we're, on track with when a big project moves over to a mainnet launch, because that changes the fundamental data source that we have to track.
That's right.
So I think that, yeah.
And that's been actually a great trend this year. All the projects are coming out of testnet into mainnet. It's like the truth is out. They've been working so hard on building this technology, and now it's real. And so this is a great time for people to start actually analyzing what's happening. But importantly, that switch causes us to parse the new mainnet and switch from maybe ERC20 to the mainnet. That's going to cause a different impact to the rating.
Yeah, and so when you work with some of these projects as they're going on their mainnet, as they're launching new features, doing more acquisition, tell us a bit more about how they really utilize FCAS on a day-to-day basis, and some of the data from FCAS, like how does it drive their organization?
Yeah, so the first thing I'll mention two use cases, each on one side. On one use case, we have an organization that we work closely with that was seeing some unintended behaviors from speculators. They had a structure by which speculators were supposed to, investors were supposed to manage their assets in a certain way, and behaviors were indicating that wasn't the case, but they couldn't see where it was coming from or how. They knew maybe assets would be sold or something, but who, when, where, what's happening. And so we were able to, by parsing their chain, look in and say, like, these are actually the addresses in the Genesis block that are taking these behaviors, et cetera. So we can get deep into even the speculator side and say, like, here's what's happening and here's why it's happening. Okay. On the user side, so many other customers are trying to prove that they have utility, or where maybe we react as usage. People are actually using our dApps or using our tools, and so we'll go in and actually be able to show not only how much usage is actually happening, but the usage per dApp, where there are trends that seem to be consolidating based on usage patterns. When somebody uses a specific token, how often are they returning? We often will align it with a product launch. So you launched this marketing campaign or this product launch. Did that impact usage? And in what areas did it impact usage? So you can begin to sort of understand whether what you're doing is working by looking at the data closely.
Yeah. I would add even a bit more specifically, there are a few smart contract-based projects that we work with who use us to even something that seems straightforward, but it turns out is not, tracking the different types of calls to their smart contracts, right? So maybe there are 8 different things users can do on a smart contract on an ERC20 token. You want to see that over time. You want to see it in terms of US dollars versus the volume of the token. You want to see it segmented out by different types of users. You want to see if you're a currency, maybe you care about the average transaction volume versus the number of transactions that user-owned wallets are making. So the ability to tease apart user wallets from speculator wallets and to look at contract calls in particular to tease out the different kinds of events that can happen on a chain or a smart contract or a token, whatever you are, that's what we're offering, right? We're getting deep insight, the ability to ask really specific questions and to track them over time, to see the full time series history, and to do that user segmentation. I think also, layering on the ability to see a cohort of similar projects that are in your sector or share your use case even at a lower level gives a lot of context and insight into where you stand amongst, say, other stablecoins. So that's, yeah.
Yeah, and I think that kind of leads into my next question. So, FCAS tracks utilization of the blockchain, and many people have been asking things like, how do we get mainstream adoption of crypto? So in your opinion, based on the data that you've seen from all of these different blockchains, what are the most effective ways to grow adoption of blockchains?
Yeah, that is the big question. That is for sure. Well, I think we can only say from use cases. I would start here. A year ago, it was very hard for us to even discuss adoption. There was a lot of building. There was a lot of intention, but we couldn't really point to anything that was like, wow, that's really building. Today we see it a lot. We see it in pockets. I think I would articulate, we see it a lot in new chains that are forming or have launched to mainnet and are attracting really top developers who know how to build dApps that can succeed. So I would almost paint 2 use cases. Platforms that know how to attract developers and that involve developers in being part of their platform and feeling loved. So like a lot of platforms who treat their developers like part of their team by giving them free tools, by giving them incentives to join. And then the second is let's get to reality. Like the projects where there's a use case that people need, like go back to the internet, you know, there were a lot of things built that was like, who would even, I don't know why that we need that. Well, most people need Amazon because people shop, and most people needed Netflix because people watch movies. So, you know, the use cases where you're like, well, people already do that. Is there a better way to do it? We're seeing a lot of uptake on. So you know, as wild as this space can get, I think people who are building should maybe sit back and say, like, is what I'm building really a thing people need? If so, it's going to drive users, and users are going to lead you to success.
So a more general question here would be, what are some of the projects that you've seen, or you don't have to name names, I think, like just to stay neutral, but what are the types of projects you've seen where it actually does improve on what people already do now, but it's better with blockchain?
Yeah, I think, so I try to take everything back to a quantitative question. So I would say if we look at where there is an indication that there's potentially some user adoption happening, even in the early state that we continue to be in crypto, I would say there are 3 sectors where I've seen evidence that there's maybe some positive momentum happening. That is it's a lot of couching my, anyway. Okay, so
data scientists saying,
so we have lending platforms that allow you to get value out of something like your Bitcoin that you don't want to liquidate because you think it will go up in value over time. We see identity verification and privacy projects getting increased, partnerships with sort of companies on the non-blockchain side. You can probably think of a couple of prominent ones if you're following the space. And payments continue to be, you know, the sort of obvious one, right? But there are pockets that are in particular, like international regions and countries with destabilized, fiat currencies, where cryptocurrencies are used more and more frequently for the reasons that we know that they can be effective payment systems. So I think those are the 3 so far where I've seen sort of a rising tide in true usage. I think the gaming and gambling DApp scene continues to be surprisingly popular, and I don't see that slowing down either.
Yeah, and I think something that we've all been paying close attention to, and actually there is been a lot of talk in the chat, is what do you guys think about Facebook Libra, and would FCAS track non-public blockchains in the future, permission blockchains in the future?
So we absolutely would. I would say we're paying a lot of attention to what's happening with Libra. There are some big things coming from us in that world, but you know, yeah, I think the space will evolve, and ratings, discipline, and business intelligence need to go where there are real use cases and growth opportunities. So if something establishes, we'll rate it, and we'll understand what behaviors are causing that organization to achieve its goals. Yeah,
and I think kind of moving more on that, like tell us a bit more about some of the other trends in the institutional space that you've noticed that FCAS would be looking more into.
Yeah. So in the institutional space, I mean, I'll just say we like, I think everyone else have been watching closely all the institutions, whether it's Fidelity or Bakkt or ICE or whoever, are building tools to support this industry. I will tell you, I think of this, I'll just say before I put it into Eric's words. I feel like we're in the midst of everybody's watching these baby steps. Someone got approved for X and someone got approved for Y, without realizing that each baby step has been turning into these massive leaps. And so I think everyone's waiting for this strike of lightning to woo, it worked, an ETF got approved or something, when actually all these things have been rolling like a tidal wave towards one day we're going to wake up and be like, that's interesting. Fidelity's got custody, and Bakkt is doing futures. It's all there. And so I think less about when are the institutions coming, and they're all doing their work. it won't be one moment. It's all happening. And so, like what we see from the institutions is quite, interesting pieces in the game. Like everyone's doing their work. It's all good. Let's focus on, building real businesses inside of that. It's all going to play out.
I think from the institutional perspective, it's getting to the point where it would be foolish of them to continue to ignore crypto. So I don't think any, careful organization is ignoring crypto.
Yeah, and we see that we have a lot of organizations that a year ago were like, yeah, crypto, and now are calling like, hey, my chief strategy officer is asking me what we're doing. We're like, oh, that's not surprising. Yeah, so.
Yeah, and I think that's a very welcome change, I would say, from our perspective as well. We've seen that. So I think we have a couple minutes left. So give us some parting words. Tell us more about where you see the industry going, other than everything that you've already shared, and and tell us more about your future plans for FCAS in the next 1 or 2 years.
Yeah. So I'll just say, we are, by rating 520 or so projects and platforms, like we're still early in understanding how this space is evolving. Like I like to think in 5 years we'll look back and be like, we knew all these things, but like we didn't really know how important certain aspects were, et cetera. And so the space is just in constant evolution right now, and that's pretty exciting. So I'd say FCAS is a very strong mechanism. It's based on pure fundamentals, quantitative. We're here more than anything to help the industry create clarity. But the way we think of our business internally is like when a project calls, we jump and we pay attention, we have discussions, and we learn, and we're willing to adapt as we see things that are happening in the market. And so, it's constant evolution right now. It's been a great journey so far, but lots to come.
Yeah. I would say that, the plan for FCAS is to continue to try and adapt as quickly as possible to all the new use cases, all of the sort of fascinating developments that these new crypto platforms are coming out with, and to make sure that the way that we represent that data is true to what they're doing. So that's what we, internally are sort of working feverishly to make sure that our models reflect that, and that we're using the relationships that we forge with all the great projects that we're working with to help them on that journey and to give them insights that they aren't able to get anywhere else.
Yep. Wonderful. And I think for us at CoinMarketCap too, like it's been wonderful working with Flipside Crypto. I think like you guys have always been very principled about going the quantitative route, always sticking to your guns when people come calling and say, why am I getting a fragile for my blockchain? So I think that's what we respect, and that's what we need. I think we face a lot of the same problems as well at CoinMarketCap when people ask like, why is this displayed as such on our circulating supply, things like that. But it's always about sticking to the methodology and sticking to the principles. So I think it's been really great for us working with Flipside. So I think another thing, while everyone is still here, we are going to have our own CoinMarketCap conference in November this year. It will be November 12th to 13 in Singapore. So I believe Dave and Eric will be joining us at the event as well. So hopefully, if you have any other questions, we would love to have you guys, meet them in person and speak more about it. But in any case, we invite all of you to join us at the conference. And Eric and Dave, thank you so much for your time today. And we look forward to having more educational material come from you. The newsletter is out every Thursday with Flipside's rating for over and undervalued cryptocurrencies. And thank you for joining us today, and make sure you subscribe on our YouTube channel to get updated on our next CoinMarketCap educational webinars.
Thank you.
Thanks.